Hello, everybody. In honor of Election Day, I'm going to be doing kind of a special stock review. Not really so much special, but I'll be doing Trump Media because that is the only company that's probably the most directly affected company by the election. And I'm just going to be going over the financials. Um, let's get into it. All right, so let's just get right into it. Let me clear this out first. That is from my last one. But first thing is cost of capital 9.6. It's decent. Target price, there is none. So honestly, I'm just going to give it the 0.5. And then long-term growth rate, there's none. So I'm going to give it the 0.5 because I do not know. Let's go over to the income statement. Now, honestly, I've looked at this stock before. It is interesting to say the least. So they have had no sales at all. And the sales that they've had have been very negative. This is in, I believe it's supposed to be in thousands. Oh, sorry for that. I believe this is supposed to be thousands. Um, yeah. So they've made less than 2 million in sales other than here. Okay. They've made 3 or 4 million in sales. And in the same time, they've lost over 300 million in one quarter. So their sales, I mean, I really don't even want to give it the 0.5. Technically, they're positive and growing, but on a technicality, but considering their EBIT is 18 times higher negative, that's not great. So operating income, massive negatives, that's a 0. Net income, massive negative, 0. EPS, not great either. I mean, there's really nothing to say for that. And then in terms of total shares, yeah, no, not that either. So going over to cash, let's see what the balance sheet looks like. Now, cash is actually decent, but again, that's also from taking out debt and diluting shares, but we'll give it to them. In terms of assets, they are growing. I mean, shaky growing, but they're growing. Short-term debt, there's almost none actually, which is solid. In terms of both, they honestly don't have like any, which is good. It's not decreasing, but it is coverable by cash. Retained earnings are probably going to be horrible, which they are. Okay. Let's take a look at the cash flows. Operating is atrocious. Investing is decent, but it's capital expenditures, which is a little different than what I'm looking for. That's from selling fixed assets. So if it was like sale of investments or something else, but I mean, I'll give it the 1 just because it's negative. Financing cash flow is massively positive, 0 there, and then free cash flow is massively negative, so a 0 there as well. Let's go into the use of cash, see what that looks like. Repayment of debt is not there, and repurchase of stock is there, shockingly. I cannot believe it's there, but it is there, and it's increasing, so that's something. Let's head over to the ratios, see what that looks like. I'm going to go to the quarters for this just because they're a little newer. Net margin does not exist. I can't score it because it doesn't exist. But return on assets on return on equity is there, and they are horrible. And long-term debt to total equity is extremely low. Extremely low. So, I mean, decent. I'm going to give it the half credit there only because it's going to go up. So, honestly, final score 31.5, 9 out of 22. That's not crazy bad. Not crazy. 31.5, 6, 2, 2, 4. So, yeah, DJT 31.5. Have a happy election day. And hopefully you want to subscribe. I'll see you in the next video.